Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Thursday, October 28th, 2010. We'll take a look at the market today, folks. A massive gap higher into a master resistance level. The selling started and came quickly. Why? Well, first off, you have to understand what happened yesterday. Today is a very unique day. It's the first time this has happened, and I will explain everything in regards to it. First off, yesterday was not a POMO day. POMO, permanent open market operations by the Federal Reserve to help prop the market up. That's the first thing you have to understand. It was not one of those days. Now, what ended up happening was everyone realized today was a POMO day. That means the Fed would be out there propping the markets up or trying to push the dollar down. So what ended up happening was early in the day yesterday, the markets were getting crushed. There was no POMO to save the markets. By about 1:32 p.m. Eastern Time, all of a sudden, we saw a massive surge to the upside. Now, why was this happening without POMO? The answer is this. Everyone realized today was a POMO day. They started to buy on anticipation. They knew that the market would generally be up on a day like today, and that's why they were buying it. Now, you had everyone buying tons of volume here towards the afternoon session, right here, buying on POMO. The markets, just like we knew, would gap higher today on the back of a very weak dollar. The dollar's getting pounded today. So on a weak dollar, the markets gap up. But everyone that bought yesterday then says, wait a minute, we just gapped up. Today's a POMO day. I'm selling into it. They start selling, that brings the market down right off this little pivot top. And again, it's a beautiful kind of Pavlovian bell-ringing experience today. Take a look at this blue line that I've had in my charts for weeks now. It tracks all the way back to the 21st right here, pivot top, as well as even further back than that. But either way, that's a beautiful little area right now, folks. The blue line tops the market out on the gap up today. The markets fall below the white line here. Look at that bear flag consolidation. More falling here. And again, this is all on people that bought yesterday on anticipation of POMO, which was a self-fulfilling prophecy about because you saw the market surge up yesterday afternoon on the anticipation of POMO today. The markets did gap higher, but then all those sellers came out and just started selling. They were taking profits. POMO's done, move out of the market. Sell, 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 sell. The market's dropped beautifully here. Take a look at that fall. It brings you right into this area right here. White trend line sloping up. If you want to see where that trend line comes from, you actually have to go all the way back here. Connect all the lows. That's where that trend line comes from. And again, it's a beautiful phenomenon today because, again, generally on a POMO day, you'd have the markets up, but you don't have that because there's so many sellers from yesterday's anticipatory POMO pump. And again, it's a really interesting. This is the first time we've seen this happen, but it does explain a lot because you'd have a lot of individuals that are buying or expecting more out of the markets, and now they're disappointed when everyone thinks one way. It generally does not go that way. All right, so again, beautiful fall. There's a bear flag right here, two-candle bear flag. It falls. Here's another bear flag. It falls. Here's another bear flag forming, but we are into a major support level, 50 moving average and beige trend line right here with the pivot low. If you zoom out, you can see this pivot low goes all the way to this pivot low back here as well in the 26th. I mean, there's a lot of levels here that are working so beautifully. And by the way, this is what we teach in the Research Center, folks. We teach this kind of stuff. We're an educator. We give swing trades out as well when there are swing trades to be had. We also do analysis guidance, guide you on everything from oil, the dollar, to the markets, to individual stocks, commodities, you name it. It's there. Gold, we cover it as well. So again, you want to get involved in that Research Center ASAP, and it's just a fantastic phenomenon today to see what's going on. Now again, market kind of stalling here. Take a look at the dollar. The dollar, again, is lower on the day as I bring up that chart. The dollar right down here. This is where we closed yesterday. The dollar gapping lower. It's actually at the lower range of today as well. As I zoom out just a tiny bit to show you where it was, we're not back to negating the previous two up days in the dollar, but we're pretty much doing that. I mean, you've taken out now the lows from 2 days ago, which was right here. By the way, just take a look at that. You gapped up today and you moved right into it, and then you sold off. Here's where you opened. You moved up into it to the 200 moving average. Fell, bounced, fell, and now you're hovering right here. But the markets continue to be very weak as there's a lot of selling volume from yesterday. Now, as that selling volume kind of surpasses and kind of passes this market by, and eventually that'll be kind of its distribution. Essentially, it's distribution right now as you're bringing the markets in. All those buyers from yesterday are selling. They're eventually going to be out of this market. Now, the question will be is, later in the day, do we see this float up again as we see some of the POMO effect come in and the markets kind of float back to the neutral side or back around that flat line? And it's very, very possible as well as the volume gets lighter and lighter. Remember, very rare to see a major down day before the elections. I've said this for weeks now to our premium members. I said, don't expect any major selling. Could you have a little bit of a down day? Sure. A little bit of a down day is fine. The Fed does not mind that. The president does not mind that. But will they let this market really sell off 200-300 points? No, that's just not going to happen before the elections. You have the FOMC policy meeting next week as well. That's going to keep this market in check because everyone's waiting on QE2. But essentially, you have to look at the elections. The Democrats want to hold. The Democrats are in charge right now. They're going to make sure that economic news is coming out good right now. Did you guys see the jobless claims numbers today? 434,000. Best number in a long, long time. Is it any coincidence that we have the elections next week and this is the last jobless claims number before the elections? Absolutely not. Again, realize that, folks. Don't be ignorant to the ways of the market. I hate to see it. There's so many people out there, individual investors, individual traders, that have no idea the inner workings of this market, and that's what we do. We unveiled it all in the research center. You want to know exactly what's going on. Do you want to avoid the hype of Wall Street and all that nonsense that the politicians and the Federal Reserve bring in? We're going to tell you exactly what's going on. We don't hold anything back, bottom line. Okay? And again, markets right now floating here. You have volume decreasing. You see volume down here. Let me zoom in a little bit more. Notice the volume getting very, very light. We are into the midday session now between 12 o'clock and 1 p.m. And again, the volume staying extremely on the light side. Let's take a look at some key stocks moving the market today. There were some pretty ugly earnings. 3M, ugly earnings here today, although it's at a support area here. Take a look at your daily. I just put out a chart on the hot charts, not on the hot charts, on the Rant and Rave blog, and take a look at this support right here. Good support. I just put this out, and it was a great call so far. This is your secondary support line here at the 200. First support at 83,985, which we just pierced. That's a beautiful little buy right there. And then the 200 moving average below, if it happens to go there, that's another good level. So good little move on 3M to the downside today, down over $6. Goldman Sachs is strong today. These financials, again, whenever the market's weak, when you're seeing money being pulled out of either tech or commodities, the financials have been moving higher. The financials had a good move yesterday. Today, Goldman Sachs up again. Exxon Mobil had earnings this morning. Good solid earnings on Exxon, but again, gapping up and pushing up into a double top right here. That's going to be resistance. Exxon's extremely extended short term, just like a lot of these charts are. I mean, you can take a look at stocks like even Apple and IBM and stuff like that. Very extended, although those have pulled back off their highs. Apple warned yesterday on margins after hours. The stock is down about $5.50. This morning, Apple Computer opened flat, and I was blown away. In my head, I was like, are you kidding me? A company like Apple warns on margins, and it's going to open flat. Sure enough, now it's selling off as I thought it would. I couldn't believe it. What a shorting opportunity at the open. Look at that short right here on the little bit of a gap up this morning, and look at where it's currently sitting at the lows of the day. Great move there. Amazon down $1.85. That's coming back in after earnings popping as well. Again, a lot of these stocks just continue to be overdone. After the bell today, Microsoft reports. Watch that report for the tech sector. It should be pretty important. And again, watch to see what happens. Tomorrow, GDP, folks. Let's go back to the SPY intraday. GDP reported tomorrow morning. That's going to be big. You have to expect it's going to be good. I don't think it's going to be amazing, and I don't think it's going to be bad. I'll tell you why. If the GDP number is too good, people are going to say, oh, the Fed doesn't have to do they don't have to do a lot of quantitative easing. That's going to be negative for the market. If it's too bad, let's say if the number's only 1% or so, or under 1%, then all of a sudden people are going to say, wait a minute, this stimulus isn't working. It's going to have to walk a fine line. The porridge can't be too hot, can't be too cold, has to be just right. So a good GDP number tomorrow is expected, even though chances are it'll be revised down dramatically in the next few instances. Do I think it's a real number? Do I think it's a made-up number? Yes, I do. I do think it's a made-up number. All right, and I do think it's going to be put out there. Whatever they feel is going to be best for the elections and best for QE2. That's what they're going to put out there. So the markets hold steady. Again, I would be somewhat shocked if it came in extra, extra high or extra, extra low. I think somewhere right around, what's the market expecting right now? I think the market right now is looking for right around a 3% handle on that. 2.4% is what the market's looking. I think it could come in as high as 3% or maybe a little bit above 3% and as low as probably about 2.0%. I don't think it's lower than 2%, and I don't think it's much higher than 3% tomorrow. All right, folks, have a great afternoon, great evening. Join that research center. You want to be informed. You want to know what's going on. You want to be on the cutting edge so you can make profits. That's the bottom line. It's at inthemoneystocks.com. Take care.